We have a critical move coming for crypto soon. And I am talking about the Bitcoin chart here because Bitcoin is still the driver of this crypto market. If it's going to be dumping soon, that's going to be very bad for a lot of these altcoins here. However, if it actually recovers from here, then we can expect quite a bit of better bullish price movement for a lot of these altcoins as well. So very important to be paying attention to what happens with Bitcoin right now because it is in a critical zone. I talked about Bitcoin here on this weekly time frame, and this is a breakdown below this bearish wedge pattern here. Breakdown target would be about 80,000, and that'd be catastrophic for the altcoins if it actually gets there. However, Bitcoin is holding on to some key support levels right now, including the 108K support level for a lot of significance, and I'll show you guys why that is. If this 108K level does not hold, the next key level we'll be looking at would be about the 102K level. We're going to be taking a look into a few altcoin setups later in this video when we resume the charts, resume looking into the charts. We're going to take a look into a few altcoin setups, which will include Aleo, DIA, which is a request by one of my viewers. If you guys have any requests, you guys can drop it in the comment section below. Make sure to drop a like and subscribe as well, and I'll pick a request to do for you guys on a daily basis. Also going to be taking a look into AIC, which is AI Companions. See what's happening in these markets. Some patterns I've talked about last time have been invalidated. Price targets may have been updated. So we're going to be taking a look into these markets and see what's happening in them and what has changed. First of all, we're going to be taking a look into some news, major economics news, and then I'm going to read some viewer comments and I'm going to respond to them. So let's go ahead and dive into the charts. The news and then the comments and then the charts. All right, the first piece here is by Cointelegraph. Bitcoin closes 107K CME gap as focus shifts to Friday's key CPI point. So I've seen some YouTubers talk about this CME gap, okay, that needs to be filled, or that most likely gets filled, okay. That's interesting. I don't really study the CME gap. My focus is mainly on patterns, oscillators, the same thing I've been talking to you guys about on a daily basis. And I think with that already, I'm already getting a huge edge on this market by looking at the probability of movements in certain directions. Okay, but let's go ahead and entertain this some of these key points here. Okay, key points: Bitcoin retreats to near 106,000 as gold struggles to find support after a major daily loss. Gold is still on a pullback right now. Now, I do see some people's arguments that gold, as gold actually pulls back, some of this capital is going to be rotating into Bitcoin, okay? We're going to see how true that is, okay? Because gold has a huge market cap. Last time I checked, was about $28 trillion market cap. Let's actually take a look into that right now, okay? Market cap of gold. It's about $28 trillion, okay? If even a small portion of that rotates into Bitcoin, that would be crazy, okay, if that is true, right? So we're going to be keeping an eye out on the gold price and see if it's inversely correlated with Bitcoin price. Right now, not so much. Bitcoin's not moving. It's pretty flat. Gold is pulling back. All right, some key points here. Bitcoin price action continues low time frame liquidity gains after failing to hold support higher. Yes, we've been in this range for quite some time, okay? It's been boring. I understand the sentiment. I've been in this long consolidation since March of last year, okay? It hasn't really been that exciting since March of last year. But I know that the cycle, the excitement is going to come, okay? Because all cycle comes to an end. Bull cycles, bear cycles, boring consolidation cycles, it will come to an end. So while I understand the sentiment out there, it's been boring, I understand how you feel. I am not giving up on this market because I know because all cycles come to an end, and I don't think we're at the start of a bear cycle. But that is just my opinion. I am long on quite a bit of these altcoins here. I am looking to get a long position on Bitcoin again when I get some dry powder. So my opinions on this market are bullish, but these are just my opinions, like the entirety of this video, and it's not financial advice. You guys gotta form your own opinions and strategies. Next key point here, CPI week begins to take its toll on crypto and risk assets. Honestly, I think the CPI it has very little effect on the markets this week because you know why? Because if we actually take a look into the Fed rate cuts probabilities, this is based on the CME Watch tool. We're already at 99% almost for a Fed rate cut for October, and from what I'm understanding, this is majorly driven by unemployment, by jobs data, rather than inflation. Okay, so while the CPI data is going to be interesting to pay attention to, I really don't think that's going to move the markets too much because this Fed rate cut cycle is being driven by jobs and unemployment, mainly jobs, right? So deteriorating jobs data. All right. Next piece is by News BTC. Bitcoin trapped on Binance. The battle between 107K and 119K heats up. All right. Bitcoin is struggling to establish a clear direction as volatility tightens and traders facing increasing uncertainty after weeks of indecisive movement. Short-term price action remains choppy. Yes, leaving both bulls and bears without conviction, but it's gonna end. This consolidation is gonna end. And I'll point out to you guys why I think that we're at a critical level right now. Okay. The report highlights that this range is centered between 107.5 to 119. Okay, where the level where the most trading volume has occurred, sitting near 117.5. Okay, all right. So yeah, I mean something's about to happen, especially when volatility tightens. Next is by the block. The Standard Chartered says Bitcoin's dip below 100K seems inevitable by this weekend. Now, I like to pay attention to both bullish and bearish news because I like to keep an open mind. I would like to know what on the other side is also making sense. Let's take a look into what this news piece has to say. I want to see if it makes sense. Bitcoin slides below 100K seems inevitable by this weekend, according to Standard Charter's global head of digital assets research, Jeffrey Kendrick, who said the decline could be short-lived and present a buying opportunity. So why is he saying that? Kendrick said Bitcoin's rally to an all-time high above 26,000 on October 6th was interrupted by renewed U.S.-China trade war fears that triggered a sell-off on October 10th. I mean, the timeline doesn't make sense to me because the news came suddenly 4 days after, according to this timeline. I mean, I don't think anyone would have known that there was going to be that trade war news, right? Does anyone know? I mean, I think that actually caught everyone by surprise. It came in a tweet, from my understanding. So this timeline's kind of off to me because this 126K was hit on October 6th, according to at least what he's saying. And then the news came suddenly 4 days later. So I'm skeptical about that. The question now is how far does Bitcoin need to fall before finding a base? He wrote that a dip below 100K seems inevitable, although the dump may be short-lived. Why? I mean, there is no valid reason I'm seeing here yet. So you guys can read into this if you guys want to, but I'm not seeing a valid reason so far after reading a little bit into it already. And I'm just going to show you guys what I'm seeing, okay? Next piece here is by You Today. Bitcoin up or down. Veteran trader Peter Brandt reviews Bitcoin take. Bitcoin range between major levels of support resistance in its recent trading session is currently trading at 108K-ish. All right, let's scan this real quick. I mean, these are just recaps. Let's see here. Over $748 million in leverage positions were liquidated according to CoinGlass data. split between long and short positions. Yes, there has been quite a bit of a whip in just the past couple of days, right? And then let's see here. I'll be first to admit if it could be right. I am willing to go with either direction. If Bitcoin goes up, I want to be long. If it goes down, I want to be short. So basically, he's not really saying too much. Okay. Let's just go ahead and go to the next piece here. The next piece here is by Cointelegraph. Gold's worst dip in years wipes out $2.5 trillion. How does Bitcoin match up? Well, Bitcoin's been staying steady. And let's see if the argument is true where Bitcoin sell-off rotates into, gold sell-off rotates into Bitcoin. We're going to be keeping an eye out on gold, okay? Next is we're going to be taking a look back into the charts here, and I'm going to show you guys why I think we're at a critical zone, right? If the current support does not hold, the next key level I'll be looking at will be about the 102,000, which is the weekly 50 SMA. I don't think that's going to be very strong support because on this trend, we have tapped that support 2 times already. Every time you come down to a support, the support gets weaker. Now we are on the daily 200 SMA, so this is the critical zone I'm talking about at about 108,000. If we lose this level, the next support level we could still be looking at would be about 106K on this daily time frame. There is likely bullish divergence at that level, where if you actually take a look into the RSI, so that is some potential support at about 106,000. Basically, we're in this range, okay? We're still dancing around the daily 200 SMA, okay? If we come down to 106,000, there's possible another bounce as well. That is bullish divergence. So this is basically what I'm seeing. I also mentioned that we broke out of this falling wedge pattern. Price target would be about 122.5 if we actually make it there. Some major resistance along the way as well to be paying attention to. Let's go ahead and go to altcoins. Now, when I mentioned price targets are estimates only, there could be more, there could be less. Okay, so nothing in this market is for certain. Always got to consider the downside, as well as the upside. Okay, let's go ahead and go to AI Companions AIC USDT. See what's happening in this market here. Now, on the weekly time frame, this is where I talked about a potential cup and handle pattern here. AI Companion, I think since the last time I've talked about it, it went up to about almost 60 cents there. Now, is this still a potential cup and handle scenario? In my opinion, yes, because we still have rounded bottoms on this weekly time frame, and this still, it's still a cup and handle formation, even though I don't have even though the last break above the resistance here at about 57 cents, went above the resistance. So it's not an exact candle touch on the resistance of about 57 cents, but I would still say that this is a cup and handle pattern. Just look at this formation here. I also talked about on the daily time frame, right? Now, I also want to mention that this is not a finished cup and handle. I do want to see another touch back at about 57 cents resistance, which is the neckline of this cup and handle to actually validate this cup and handle. Right now, it is still a forming cup and handle. Okay. Now, I talked about on the daily time frame that there was a falling wedge pattern scenario, basically played out to the T here. Price targets for this falling wedge pattern, it looks like it's trying to break out right now. Price target would be about 65 cents almost. Now, price targets, again, are estimates only. There could be more, there could be less. A lot of which is going to depend on what happens with Bitcoin if we're talking about these altcoins here. Because if Bitcoin starts dumping, a lot of these altcoin setups, they're not going to matter very much, okay? So, very important to be paying attention to Bitcoin before altcoins. Let's go ahead and take a look into DIA, which is a request by one of my viewers. If you guys have any requests, drop it in the comment section below. I'll pick a request to you for you guys on a daily basis. Now, on DIA here, I talked about on the weekly time frame, there was a falling wedge pattern. This was a breakdown below the falling wedge pattern because on the weekly time frame is the highest time frame this falling wedge was validated in. And DIA actually got a weekly candle close, 2 weekly candle closes below the pattern. So even though falling wedges are bullish patterns that usually break to the upside. We're just talking about probabilities here. They could still break down. There's still a smaller chance they break down, and this one did. So I'm gonna go ahead and take away some of these trend lines here and see what we could be working with here for DIA. Daily time frame. There is a double bottom, okay, at 48 cents. That's the neckline of this double bottom. Daily time frame, bullish divergence that could be playing out right now. Double bottoms have a higher chance of breaking to the upside. If this one does break to the upside, the price target will be about 59 cents. So let's see if that's what DIA does. Let's also take a look into I want to zoom out again one more time. Also want to mention that it is on some key support levels here, based on this monthly time frame. If you guys actually take a look into where the DIA monthly candle is, you guys can see that it is basically at quite a bit of these previous resistance levels. And previous resistance is support, okay, unless you lose it. So this is basically why, DIA actually looks pretty good. Because on the support level, it does have a bullish pattern on the daily time frame. It did invalidate that bullish pattern on the weekly time frame, so that's not good. But aside from that, there are still some bullish signals for DIA. Let's go ahead and go to Aleo and see what's happening with Aleo. Now, I talked about Aleo last time, and I want to point out that there is a possible cup and handle scenario if Aleo comes back here to retest about 55 cents. I'm just going to say 55 cents for even round number sake, okay? And this is on the monthly time frame, so it could take some time to play out. And why am I saying that there is a potential cup and handle scenario here? Because I see rounded bottoms on this monthly time frame, and rounded bottoms are the foundation of a cup and handle pattern. They usually turn into a cup and handle pattern from my observation. And let's kind of zoom in now and see where Aleo is at, okay? Daily time frame. Daily time frame, I talked about this falling wedge pattern. You guys should definitely pay attention to wedge patterns. There's the rising wedge, there's the falling wedge. There are also channels. There are, they work almost the same way, right? The rising wedges and channels are bearish patterns, and falling wedges and falling channels are bullish patterns. I talked about this falling wedge pattern here last time, and price target was about almost 31 cents. Aleo did not quite get there. It went up to as far as about 29.5 cents almost. What could Aleo be doing right now? Okay, it has formed a smaller falling wedge pattern since the breakout here. That's probably more noticeable on a smaller time frame. Price target here would be about 31 cents. So basically almost exactly to that price target of the bigger falling wedge pattern here. Now, on the daily time frame, I also want to point out that there is also another potential for a cup and handle pattern. If it comes all the way back up here to about 38 cents to retest this two more times, okay, then that could be a cup and handle pattern. Still early to say. So this is basically what I'm seeing for some of these coins: Aleo, DIA, AIC. Let me know if you guys want to continue seeing any more of them or any other coins in this market by dropping a like, comment, subscribe. I'll pick a request to you for you guys on a daily basis, and I'll see you on the next one.